Every time I talk to people about money, I hear the same thing. I'll start investing later, there's still time, but here's the truth. 2030 isn't far away. That's just a few short years, and it's gonna sneak up faster than a Monday morning. If you don't own the right assets by then, you could end up watching other people build wealth while you're still figuring out where to start. I've made that mistake before. Waiting too long, overthinking, believing I could time the market, or telling myself I'd start once I had more saved. Spoiler alert, it never feels like the right time. Until you look back and realize you've lost years of growth. So today, I'm sharing 9 assets you need in your corner before 2030. Not 50 random ideas, just the ones that matter most. The ones that could completely shift your financial future if you start now. Number 1. Productive real estate. Real estate has been one of the most reliable wealth-building tools for centuries, but not all properties are equal. The key is owning productive real estate, assets that generate steady cash flow while also appreciating in value. This isn't about buying a home you live in, it's about rental properties, multifamily units, or even small commercial spaces that can bring in income month after month. By 2030, urban migration and remote work trends will reshape where people live and work. Cities that are currently undervalued might see huge growth as infrastructure improves. At the same time, certain overpriced areas could stagnate. Doing your homework now, looking at job growth, population trends, and local development can help you spot markets with the biggest upside. Think about it this way. A single property with a stable tenant can cover your mortgage, your expenses, and still leave you with positive cash flow. Over time, that cash flow compounds because rents tend to rise with inflation. Plus, property owners benefit from tax advantages like depreciation and expense deductions, which keep more money in your pocket. The earlier you start, the more time you have to ride out market dips and watch your property's value grow. By 2030, that could mean having a fully paid off asset that continues to generate income, or at least one with significant equity you can leverage for other investments. Real estate is not just a shelter. It's a wealth engine if you choose the right type. Number 2, dividend-paying stocks. While real estate gives you physical ownership, dividend-paying stocks give you a piece of profitable companies, along with regular income just for holding them. These aren't speculative, high-risk plays. We're talking about established businesses that have been paying and increasing their dividends for decades. Think companies like Coca-Cola, Johnson & Johnson, or Procter & Gamble. Dividends are powerful because they offer 2 streams of growth, the stock price itself and the cash payouts you receive. You can choose to take that cash and spend it, or you can reinvest it to buy more shares, which then pay even more dividends, a compounding cycle that can be life-changing over time. By 2030, the difference between someone who started reinvesting dividends today and someone who waited even 3 years could be massive. This is because of how exponential growth works. Even small payouts become significant when they're consistently reinvested. Another advantage? Dividend-paying stocks tend to be more stable during market downturns. Investors flock to companies with a history of reliable payouts, which can cushion the blow when markets get volatile. That's why these stocks are often called sleep well at night investments. They work quietly in the background while you live your life. If you're strategic, you can build a dividend portfolio that covers a portion or even all of your living expenses by 2030. Imagine having your electricity bill, your groceries, or even your rent paid for by the companies you own. That's not just money in the bank, that's freedom. Number 3. Precious metals. Gold and silver might sound old-fashioned compared to stocks or real estate, but they've held their value for thousands of years. They're not there to make you rich overnight. They're there to protect your wealth when everything else feels shaky. Think of them as financial insurance. During times of inflation, currency devaluation, or political instability, precious metals often rise in value because people trust them more than paper money. If you look at history, whenever major economies have gone through crises, gold has been the safe haven people run to. You don't have to store heavy bars in a safe at home unless you want to. You can invest through gold ETFs, mining stocks, or even reputable bullion vault services. The goal is to have a portion of your portfolio, maybe 5 to 10%, in precious metals, so you're not fully exposed to the ups and downs of paper assets. By 2030, the global economy could see new currencies, shifts in trade power, or even more rapid inflation cycles. Precious metals give you stability in that uncertainty. They're not glamorous, but they're the anchor that keeps your portfolio steady when other investments swing wildly. And here's the key. Don't try to time buying gold or silver perfectly. Just accumulate a little over time. That way, you're not betting on price movements. You're simply building a safety net that will be there when you need it most. Number 4, intellectual property. Most people think of assets as physical things, houses, stocks, gold, but intellectual property can be one of the most powerful assets you own because it keeps generating income long after you've done the work. This could be anything from writing a book, creating music, designing software, or inventing a product. Once it's out in the world, you can license it, sell rights, or earn royalties whenever it's used. Unlike physical assets, intellectual property isn't limited by geography or even time. Someone in another country could be buying your product while you're asleep. The rise of AI, global e-commerce, and digital media has made it easier than ever to create and distribute intellectual property. By 2030, we'll likely see even more ways to monetize ideas. Things like blockchain-verified ownership, new licensing marketplaces, and micro-royalty systems where you get paid instantly every time your work is used. The beauty is that once you create something valuable, it can keep paying you for years, even decades. Think about the songwriter who still earns royalties from a hit they wrote 20 years ago, or a programmer whose software is used by millions and brings in licensing fees every month. If you start building intellectual property now, you could have a portfolio of creative assets by 2030 that pays you without you needing to trade time for money. That's the kind of leverage that can completely change your lifestyle.
Number 5. Index funds and ETFs. If picking individual stocks feels overwhelming, index funds and ETFs can be your best friend. Instead of betting on one company, you're buying a basket of companies all at once. This spreads your risk and keeps you from losing sleep if one business stumbles. An index fund might track the S&P 500, which means you instantly own pieces of 500 of the biggest companies in America. ETFs work similarly, but can be more flexible, covering everything from tech stocks to emerging markets. The beauty of both is that they're simple, cost-effective, and historically strong performers over the long run. By 2030, the global economy will likely have seen multiple market ups and downs. History shows that broad, diversified investments tend to ride out those storms and keep growing. If you start now and consistently add money, you'll benefit from dollar cost averaging, buying shares at both high and low prices, which smooths out your cost over time. The other advantage is low fees. Many index funds and ETFs have expense ratios close to zero, meaning more of your money stays invested. Over years, that difference compounds significantly. For example, avoiding just a 1% annual fee could mean tens of thousands more in your account by 2030. This isn't about getting rich quickly. It's about quietly building a foundation of wealth that compounds while you focus on your life. You set it, you add to it regularly, and you let time do its work. Number 6. A profitable side business. One of the most overlooked assets is a business you own yourself. I'm not talking about a giant corporation or quitting your job tomorrow. I'm talking about a small, profitable side business that can grow in the background while you keep your main income. It could be something digital, like an online store, a subscription newsletter, or a consulting service, or something more physical, like a specialty food brand or a niche manufacturing product. The key is that you control it. It's not tied to a boss, and it's not capped by someone else's salary decision. By 2030, automation and AI could replace certain jobs. Entire industries could shift, and relying solely on one paycheck could feel riskier than ever before. A side business gives you multiple income streams and the flexibility to adapt when the economy changes. The beauty is that a side business often grows faster than people expect. At first, it might just cover a bill or two. Then, it could fund vacations. Eventually, it might match or even replace your main income. Unlike stocks or real estate, you can directly influence how fast it grows with the effort and strategy you put in. And here's something most people miss. A well-run side business can be sold. By 2030, you could not only be earning from it, but also have the option to cash out for a lump sum. That's a wealth-building move very few assets can match. Number 7. Cryptocurrencies and blockchain assets. Whether you love them or hate them, cryptocurrencies and blockchain technology are here to stay. They're no longer just an experimental playground for tech enthusiasts. Major banks, payment companies, and even governments are exploring blockchain-based systems. The key is not to treat crypto as a lottery ticket, but as a small, calculated part of your portfolio, maybe 2 to 5%. The idea isn't to gamble your savings, but to have exposure to a technology that could reshape finance, supply chains, digital identity, and more by 2030. Bitcoin remains the most recognized store of value in the space, while Ethereum powers smart contracts that enable everything from decentralized finance to NFTs. There are also stablecoins, which are pegged to traditional currencies, offering a more stable way to participate. Blockchain assets aren't just about coins. They could include tokenized real estate, intellectual property rights, or shares in decentralized projects. As regulation becomes clearer, opportunities for everyday investors will likely expand. Volatility is the nature of the game, so a strategy of gradual, regular purchases can help smooth out price swings. By 2030, blockchain could be as normal in our daily lives as email is today. Having a foothold now could mean being ahead of the curve instead of trying to catch up later.
Number 8. Skills that increase your earning power. Not all assets are things you can touch or trade. Some of the most valuable ones live entirely in your mind. High-income skills, things like sales, coding, copywriting, data analysis, or digital marketing, can increase your earning potential regardless of what's happening in the economy. The return on investing in skills is often higher than any stock or property. Why? Because once you have a skill, no one can take it from you, and you can use it to create value over and over again. Skills adapt with you. If one industry slows down, you can transfer your abilities to another. By 2030, entire job categories will disappear while new ones emerge. Artificial intelligence, renewable energy, biotechnology, and remote work are already reshaping the job market. Those who keep learning will always find opportunities, while those who stop will struggle to keep up. Think about it this way. If you learn a skill today that allows you to earn even an extra $1,000 a month, that's $12,000 a year. Over the next 5 years, that's $60,000 before even considering raises or scaling up. Compare that to how long it takes many investments to deliver the same return, and you'll see why skills are such a powerful asset. The smartest investors don't just build their portfolio, they build themselves. The more valuable you are to the market, the more control you have over your financial future. Number 9. Cash reserves and emergency funds. It might not sound exciting, but cash is one of the most important assets you can have, especially in unpredictable times. A solid emergency fund is what keeps you from selling investments at the wrong time or going into debt when life throws a curveball. An ideal emergency fund covers at least 3 to 6 months of essential expenses. That means rent or mortgage, utilities, food, insurance, and any critical payments you can't skip. The point isn't to earn big returns on this money. It's to have instant access when you need it. By 2030, we could see more economic shocks, job disruptions, and unexpected expenses from global events. Having cash on hand gives you flexibility and peace of mind. It's like having your own personal safety net, ready at a moment's notice. And here's the other benefit. Cash also gives you opportunity. When markets crash or assets suddenly go on sale, the people with cash are the ones who can buy while others are scrambling. Warren Buffett has famously used this strategy, keeping large amounts of cash ready to deploy when everyone else is panicking. Your emergency fund can sit in a high-yield savings account or a money market account, so it earns some interest while staying liquid. The goal is not to chase returns here, but to protect your lifestyle and give yourself breathing room to make smart financial decisions instead of desperate ones.
If you start building this fund now, you might never need it. But if you do, you'll be glad it's there. By 2030, that kind of preparation could be the difference between weathering a storm and getting swept away by it. That's the 9 assets you should aim to have in your corner before 2030. Some will grow your wealth, some will protect it, and some will give you the freedom to take bigger opportunities. The earlier you start, the easier it will be to build and secure your future. But here's the thing. Information is only useful if you act on it. So pick one of these assets and make a move this week, even if it's just a small step, because small steps now can become huge results later. If you found this video valuable, hit that like button so more people can see it. Subscribe to the channel if you want practical, no-fluff content that helps you grow and protect your money. And drop a comment below. Tell me which of these 9 assets you're going to start with. I read every comment, and your ideas often inspire future videos. Share this video with a friend who's serious about building wealth before 2030. You never know, you might just change someone's financial future.